So today we're going to be going over how AI continues to lead the market higher. As you can see here, the tech sector where, AI is focused is up pretty nicely, while other sectors like healthcare, energy, and such are down. And a big reason for this was that Nvidia reported earnings Wednesday after hours, and now they're at 197 PE with market cap of 939 billion. And they reached a peak market cap of 955 billion after hours and pre-market. And they rose by 199 billion after earnings on 5/24. And their competitor AMD with a PE of 498, and they have a market cap of 193 billion. And the interesting thing is how Nvidia, just from the earnings report alone, the big move that it had, the 30% move, ended up being greater than its competitor's entire market cap. And AMD is no small company. It is the sixth largest semiconductor stock. And continuing on, another trend that we see here is divergence going on between the Nasdaq and the bonds. As you can see here, the Nasdaq is still trending up and bonds continue to fall. And big tech is propping up the stock market as seen by the Nasdaq, the QQQ, outperforming the S&P 500. And another support of this is that all of the indices are up despite the majority of stocks in the US market making new lows and declining. And you can see that over here. We have 31% on the day advancing, while we have 66% declining. And as for the ones making new highs, only 24% of them are, while 76% of them are making new lows. And yeah, again, what we're seeing here is AI just propping up the tech sector. And since the Nasdaq is more tech heavy, it is getting carried more than the S&P 500. And going on from that, we do have the debt ceiling issue, which is approaching rapidly. And so some predictors of when the treasury funds are supposed to run out is Yellen originally predicted June 1st, but now it appears she changed it now to June 5th. Whereas Goldman Sachs is predicting that it's going to run dry by June 8th or 9th at the latest. And due to Memorial Day, Congress is on a 4-day break. So Friday through Monday, they're going to be off. And that makes it so it's 2 days away from Yellen's original date. And then it is going to be 6 days away from her new announced date. And if you look here, back in 2011, the US received several credit downgrades from a AAA to a AA plus, and that resulted in over a 16% drop in the US markets. And so it happened on a Friday, and opening up on Monday, it led to our Black Monday. And something to note here is that Fitch and also Morningstar both put out warnings that we might potentially end up getting a downgrade again. And these are no small companies. So Fitch is one of the top 3 credit rating firms, and Morningstar is the 4th largest credit agency. All right, and as always, make sure you guys do your own due diligence, and happy Memorial Day.